following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Tom in Derry, New Hampshire. Hey, Tom, what's going on?
Mr. O'Brien, how are you today?
I'm doing great, man. How you been?
Good. This is like old timers week. I heard Rick from British Columbia. I'm waiting to hear Greg from Long Island.
I like that. Totally, man. Totally.
By the way, your website, unbelievable. Watching that thing change over the years. You guys are doing a bang-up job. You get great guests, and
well, listen.
Keep up the good work, man.
We appreciate you being out there. We never can do it without all you tigers and tigresses, Tom.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. It's a TGIF, folks. Let's make it a great one. Those who don't believe in magic will never find it. Market-wise, let's take a look at it out here. We had the Dow Industrials down 40, NASDAQ off 4, S&P's down 3, gold contract down $5.60, trading at 11.02. Silver down 42 cents, $13.92. Platinum up $2, $8.80 an ounce. Copper flat at $2.01 a pound. Light sweet crude down 22 cents, $33.05 a barrel. Bonds. The 10-year up 10 ticks, 127.13. The 30 up 11, 156.11. King dollar up 288 ticks, trading out at 98.56. The euro is at 109, and the yen is trading at 117.65. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Market's having a tough time holding any type of price. We are down 59 cents on the SPY. You're at 193.39. You've done thus far 133 million shares. That's on your daily. On the weekly, what you're going to have is this. So this past week, we've come down thus far 832 million shares. You're going into 843, which is saying that within another hour, I expect we'll do another 20 million in an hour. So bottom line is that you've come into the benchmark from October 2nd with volume. You're coming into the actual lowest bar, which is the week of August 24th. That's where the market really got smoked. Went from a price point of 187 to 182. Now that we had 1.6 billion shares. So two different things here. You're into the bar by 6 points. So the probability is you're going to go to the bottom bar. That being said, more than likely what you're going to see is you're going to see some kind of a dead cat bounce, setting up a larger ABC structure on the way down. We go take a look at the NDX 100, the 3 Qs. What do you have with the 3 Qs? Same type of setup. The 3 Qs today have done 48 million. Yesterday we came down and we did 61 million. You go put this on the weekly basis, and what you're going to see is this. On the weekly basis, you're coming into 233 million, and we've done 240 million thus far. That means we're going to be doing about, that'll do about another 5 million shares. So bottom line, you can see what's happening here. All the volume, folks, and has been for a long period of time, by the way, is downtown. Each and every time the market is trying to get to highs, can't handle higher price. Every time you come down, you're coming down with big volume. What is that doing? That's building cause for lower price. Gold contract. What do we have with gold? Bottom line, gold wants higher price. We take a look at this gold contract. We're trading at 1102. Gold came off the lows with conviction. Now, this isn't the first time it came off the lows with conviction. You know, the gold market has got smoked since 2011. The first time we came off the lows was December 3rd. December 3rd, this contract hit 1,045. You come off the lows December 4th. You do contract volume, I believe it was 204,000 contracts. Yeah, 209,000 contracts. You get to a price point of 1088. Then what do? You back down with lighter volume. You consolidate out. We were doing about 169,000 contracts consolidating out. We consolidated out from December 4th over to January 4th. Pretty wild. 4 4s. What do we do January 4th? January 4th, we go from 1061 to 1083. Have the juice behind the move. We go sideways the next day, and then we continue to have volume. We went up on Tuesday with 192,000 contracts. We went up yesterday with 217,000 contracts. We did 179,000 contracts today. So what do you have? You have on the daily and on the weekly, wide price spread, accelerated volume. Gold contract wants to run up to its swing point, 1,192. Right now, you're at 1102. Silver. Let's go take a look at silver. Silver is really tricky here, too. The reason being is silver lost the $14 price level once again. So silver is a problem child here. What do we have with silver? Silver has done 50,000 contracts today, big contracts. We did 68,000 yesterday. Bottom line, silver's got to hold $14, and it has not been holding $14. It's $13.93 right now. The XAU, we go over to the XAU. The XAU and the HUI, folks, look like they have been set up ABC structures on the way up. Nice setup. This is what you have. The XAU, we're trading right now at $46.82. We made it to a price point yesterday of $48.98. We did 46 million shares. That 46 million share was going against 40 million from the December 4th level. That is a huge plus in an extraordinary way. What we have out here today, we're backing down with lighter volume today, and we'll see whether we got an ABC structure on the way up. And if we do, it's going to be a decent ABC that will take it over the December 4th level. You get over that December 4th level, which as a price point is $49.38, you're going to be up into the swing high from October 16th, which is $58. And right now we're at 46. We go over and take a look at the Gold Bugs Index. Same type of setup in the Gold Bugs Index. The Gold Bugs Index, I believe, took the swing out with volume. Yeah, we did. So check this out. You have a couple different benchmarks in the XAU, the HUI, and the contract itself. December 4th is the largest one. And December 4th, we had we went to 121 inside the HUI, which is Gold Bugs Index. We did 23 million shares. Yesterday, we did 26.8 million shares. We take it out. We back down today with lighter volume. That's setting up higher price. That's setting up an HUI at 139.55. That benchmark there is the October 15th level. That's what you want to keep your eye on. Now, let's go to the bond market. Bonds are going to be wild out here. The reason being is that intraday out here today, the bond market has tried to hold higher price. It's failed twice thus far. At 3:15, we're doing this update. It's trying to get into higher price once again. The higher price that we're talking about is 127.16. When the jobs number come out this morning, you spike down to 126.18. We got all the way up to 127.16. It has failed twice up there. I expect as we're coming into the close, you're going to see it fail again. We're going to be down to the 127. Bottom line, bonds want lower price, higher yield. You stay right there, folks. We're going to be coming right back. Dow right now is down 61. Nasdaq's off 7. S&P's down 4.5. I'm going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 59. You get the Nasdaq off 6. S&Ps are down 5. If we go over and we take a look at this oil contract, folks, oil is on an ABC structure on the way down, not catching any bid whatsoever. On the daily, this broke the B point of an ABC structure down, broke it with volume, monster volume, and now on the weekly you're going to have the same deal. That is, we broke this on Wednesday. And it's amazing. There's no doubt. You know, oil's at 33 bucks. Well, you know what? This price projection is down at the $28 level. You know, and so psychologically, I think under $30, it's going to blow people's minds. I mean, that's where this is shaking out. If we go inside the XLE, we take a look at the monster oil companies. ExxonMobil is trading at 75.34. Now, this is making a downward swing point of 73.79, which was December 8th. And I wouldn't bite at that point either, because what you have, it looks like it's going to make a full 100% move of a move and bring it down into the 71 area. I'd let it get down into that area. What you'd like to see, if you're going to buy this thing, which I suspect it's setting up for a buy, is you want to see it break the $73.79 on a weekly basis with lighter than 100 million shares. You get that, then you get down to 71, you get light volume, then you get yourself a heck of a trading range, because the range is set up for 71 on the low and 87 on the high, which is a sweet deal. We go to Chevron, we look at Chevron, same type of setup on Chevron. Chevron is at 82, down from 98. That's on the daily. On the week, put this on the weekly. What you're going to see, this little baby's also backing down with volume, and this thing can back into basically $78 down to $74. You want to see a rejection of lower price, and that's a huge range also. You get 74 on the bottom, and you got 98 on the top. Goldman Sachs. Let's go over and take a look at some of the banks. Now, this is big trouble. Goldman Sachs is trading 165.22. Goldman Sachs broke out the lows of August 24th, which, you know, thus far in the indices, that was the largest downdraft we had. On the week of August 24th, the low in Goldman Sachs was 172. We're trading at 165.18 right now. So it's a monster on the way down. That's the first part. The second part is actually larger, and this is what it is. The second part is the aspect of this has been in a consolidation since August of 2014. Now, the bottom of that consolidation is laying out there at the 170 mark. This wants to get into approximately the 135 mark. It's a big number, you know. So we'll see if the volume continues on the way down, but that's the way it's set up right now. And that mark there would bring you all the way back to the April of 2009 area. So there's something wrong with these banks out here. If we go to Bank of America, we take a look at Bank of America. What you're going to see with Bank of America, that's at $15.30. We put this on a monthly, and this is a consolidation. This isn't bad as Goldman Sachs, I can tell you that. Bank of America, $14.36. That's how that is set up at this particular point. We go look at the JP Morgan. So JP Morgan looks to be just kind of like Goldman Sachs. So it looks like it's the large banks that are also investment banks, not just, you know, flat out banks. The Goldman Sachs, the way JP Morgan is set up right now, what JP Morgan has done, we're at 59.62. You know, the monster volume yesterday as it broke down with 27 million shares. You've done 15 million today. On a weekly basis, man, they are just getting out of this as quick as they can. Weekly thus far, folks, have done 108 million. You're taking out a swing point that only had 78, and you're into the August 24th level. That's the big problem here. It's, you know, huge problem. If you go to the small caps and take a look at the small caps have broken under the August 24th level, which is the 108.26. We're at 104.08. What does that set up? That also sets up a lower price. The next stop in the small caps, of course, is the low, which is 103.54. And you break 103.54. The key to understand with this August downdraft, folks, is that as the equities, if they break them, which I expect they're going to, there's nothing holding these babies up because we went up so fast from 2011. You know, the run from 2011, if you look at the small caps, the run from 2011, you went from $60 in October of 2011, and without a breath or a retracement, you went to 120. So you doubled in price. In between that, you know, you did go sideways, but there were no retracements whatsoever. So then we went sideways for a year. You know, last year nothing happened, sideways move. Then what ends up happening? You go south, you break down the whole year, you get underneath it, and as soon as you get underneath it, technically, the setup is you go to the bottom of the range. Fundamentally, the setup is anyone and everyone that is bought for a year is what? Is in a losing position. So that's how markets go down very quickly. That's one of the ways markets go down very quickly. Some of the Dow stocks out here, you have McDonald's up 36 cents today. Walmart's back 129 rather. Procter & Gamble is down 97. You got Hewlett Packard off 7 cents. Disney, where's Disney? Disney's a mess. ESPN, folks, is big problems. Yeah, excuse me, folks. Disney's trading at $100. That's down from $120. Disney's making its way down to this $99 area. Jobs numbers come out today. Dynamite jobs numbers, big jobs numbers out here. And what that sets up that the Fed still wants to go, I suspect will go up on rates. And that's the wild card out here, because the way the bond market has been trading, it's been trading counterintuitive that the Fed would continue to go up on rates. And this is just what it is. Like if we're looking at the 10-year right now, the 10-year is getting juice coming into the close right now. We're at 127.15. You've done 1.5 million contracts. The last swing high out here is 127.10. You had 1.2 million. So bottom line is that if it in fact does close here, that is saying that, guess what? Those bonds want to go higher. You know, my take on it, that I'm bearish on bonds right now. I got bearish really about 48 hours ago. The reason being is that the way that the bond market was reacting to the markets being down 300, 400, 500 points in a couple days, it's like, man, there's a trouble in paradise out here. The bulls and bears have been fighting over this bond market for a long period of time. They've particularly been fighting all day today, too. And we'll see whether it, in fact, stays up there at the 127.15 mark. When the jobs number came out this morning, it went down. It was fast. It was furious. It was all of the above. You stay right there, folks. We're going to be coming right back. And if you do want to test drive my gold report, great time to do it, folks. You can come over to our website at TFNN, go to newsletters, go to investment newsletters. You can test drive the gold report 30 days, absolutely free. You stay right there, folks. We got our man Steve Rhodes coming back with us. Dow down 58, NASDAQ down 8. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the Dow down 92, Nasdaq's up 16, S&P's are down 9, and as we do each and every Friday at 30 past the first hour, we have our man, Mr. Steve Rhodes. Now, don't forget, folks, at TFNN, Monday, Wednesday, Friday, we do live programming, 8 o'clock in the morning to 5 o'clock in the evening. Our man, Mr. John Logan, kicks us off. Tuesday, Thursday, we go from 7 o'clock in the morning to 6 in the evening. Nico and Paige kick us off. Then we get John Logan. After my program, we get our man, Mr. Andy Hecht. All that programming, get right on your cell phone, TFNN.mobi. You can also get Tiger TV. Just go by TFNN.com, hit Tiger TV. Steve's got a great show every trading day, 1 to 2 Eastern Standard Time. You can also come over to our website. You can test drive his newsletter right here, right now, Mastering Probability. You go to TFNN, go to newsletters, then go to trading newsletters. Steve Rhodes, what's going on?
Well, Tom, Happy New Year to you. You know, a week ago tonight, everybody was planning for New Year's Eve and making resolutions. And apparently none of us knew that the stock market was making a resolution of its own.
That's a fact, yeah. There's no doubt, man.
Yeah, and that resolution, folks, and this is an important resolution. You know, a lot of times people make resolutions and they don't keep them. In this case here, with regard to the stock market, odds favor that it's actually going to go ahead and keep that resolution. And that's not a good resolution. If folks are watching us on Tiger TV, they can see that the screen that I have up on the screen that I have up right now is the New York Stock Exchange.
Okay.
And if they take a look at the two blue diagonal lines, those are the long-term trend lines. The two diagonal lines I'm referring to, one takes us back into the 2003 bottom, all the way up in essence into the 2007 top. Did you know, I mean, is it just, do you believe in coincidences? But if we take a look at back in 2008, it was the week of January 14th that the New York Stock Exchange broke that long-term trend. So this case here, it happens to be this week, the first week in January.
No, listen, I was talking about it last week because March 10th and January 14th, I happened to, yeah, I know those dates upside down. It's so weird, man. I know. Yeah, and it's happened twice, you know, on January 14th. That markets have cracked. All right.
So now, you know, what that means is that folks, you know, from their long-term accounts really need to start, you know, taking at least some action when trend lines get broken. Back in the 2008 time period, when that trend line was broken, it eventually got tested. And both you and I know that most of the times when a trend line gets broken, especially if it's been a strong trend, such as the one that we've been in, price will try to get back up into that area. And so it's not out of the question. In 2008, it really took until May before that test actually occurred. And then once that test took place and it rejected it, never got back inside the trend, the market went south. This trend here could end up being tested relatively soon. I don't know where you're at. I still see some patterns out there that suggest that we should see some type of a bounce, and it could be a very healthy bounce. And what everybody needs to watch for is, you know, does that bounce take us up into the trend line, and do we reject it? You know, does the market just say, hey, I'm not waiting until May. I made a resolution that I want to keep right away. So it's, you know, some fairly serious, in my opinion, it's very serious action that has taken place this week.
You know what's wild, too, is that, and folks, this is just, it's a coincidence. I'd say it's a coincidence, but it really is weird that we had 2000 markets fall apart. It was January 14th in 2002 that they just imploded. January 3rd, folks, no, actually it was March 10th. January 3rd, that's when the NASDAQ imploded. March 10th, the NASDAQ imploded. But it's so weird, man, that was 2000. Then you had 2008, and we're 2016. It's like, oh my God, you got to be kidding me, man. It's just, it's you know, but hey, it is what it is. And, you know, as we're all saying, just get stops in, folks, if you're long, and it's going to be really hard for all you folks to wrap your head around that the market, you know, wants to trade lower. And it's just, you know, to me, it's a normal occurrence, but, you know, we'll see where it shakes out.
Well, it's a normal occurrence. It's a normal retracement, those types of things that take place out here. Obviously, the media, brokers, things of that sort really try to keep people certainly into the market, fully vested. But in this case here, look, we just take a look at the patterns that are out there, and we know when these shots are fired that they are they're important signals. They're important signals that begin feeling. I heard you talk about Goldman Sachs, which is a great bellwether as to, hey, there's something, you know, seriously wrong out here. And you happen to mention the figure, I think somewhere around $135.
Yes.
What's kind of interesting, what's very interesting about that 135 is just in taking a look at trend lines, long-term trend lines. In the case of Goldman Sachs, if we go back to the lows, which came in during the month of November in 2008, really the next set of trend lines that you would touch would be back in October of 2011. Just so happens that the 135 that you're looking at, would really run right into that trend line out there.
Yeah, that's crazy, right? I know.
Two different ways to look at it, but really both are suggesting the exact same thing. So, whether it happens or not, at this stage here, I'd have to say the break of that trend line inside the wider swath of the market says it is much more likely than not that that's what we'll see. Doesn't mean we're going to see it, next week.
That's right.
Of course, with China, anything could potentially happen.
Well, and what happens, folks, in a market like this too, the tricky part is where is the bounce going to go? When does the bounce come in? And how does that created? So we know that we had you came down hard in August, right? You got a huge bounce. You came all the way back up. You did a 100% move of that move, right? You fell apart again. Well, actually, in between that, we came down hard too. So you came down twice hard, then. And then it's like, okay, is that the end of it? Of the bounces of everything? Are you going to take that lunge? Because what does happen in these huge downdrafts, folks, there is a part of this lunge, if we're going where I think we're going, that you just don't stop. You just go south, man, and then you do a bounce when everything is when folks are saying don't buy. And like last night when they were doing that special on CNBC, and there's no doubt there's things that are lining up, folks, that the bounce should be here. Let's put it that way.
Well,
we haven't got a second down tick yet, but we're close. That's the bottom line.
Well, and we had a nice 200-point move in a period of about 2 or 3 minutes out there.
Yeah.
As soon as the PBOC information was released. But what we don't want to do, when I take a look at the VIX index and all of the front month contracts that are out there, we have the VIX price at 25.51, and if we take this out to September of 2016, it's currently priced at 21.38. So the cash VIX is well above all of the futures contracts. It still then suggests to me, Tom, that we're going to see a bounce. So what I don't want people to do out there is just say, listen to this segment, take a look at those trend lines, and if we see a bounce that comes, it could come in Sunday, Monday, whenever it does, to think, hey, we're out of the clear, those guys didn't know what they were talking about, or anything along those lines. That ends up being the next bounce that does occur, and it looks to me like it will, is really going to be the one that tells us, is it going to reject that trend? Or is it going to get back inside?
No, I agree. We are not saying buy, folks. We're trading. I mean, we're definitely not saying buy.
No.
Yeah, right.
No, absolutely. So the market was making a resolution. We want everybody to be resolute about managing their money, protecting their assets. So, Happy New Year to you. And it's going to be another great trading year.
Totally, man. Listen, thank you so much. You have a great weekend, safe weekend. We look forward to the show on Monday.
Take care, Tom.
Awesome. You stay right there, folks. We'll be coming right back. Our phone number is 877-927-6648. Dow's off 108. Nasdaq's down 23. S&P's are down 1150. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is down 136. The Nasdaq's off 31. S&Ps are down 14.5. And we were just talking with Steve. So what happens, folks, at Lowe's is this, is that you need, in order to get a real good low established, is that you need two separate downticks. And I would just, when we was talking with Steve, I said, yeah, we don't have the second downtick. Well, just as we were wrapping it up, you got the second downtick, okay? We just got a minus 1269. Now, we got a minus 1448 yesterday, and that's a good one. That's a really sweet one, okay? So the second downtick, as long as it's 70% of the first, you got action. When it comes in right the day afterwards, it's actually more powerful. That being said, what we don't have yet, we don't have two different things yet. You don't have a large arms reading. Okay, that's the trend. What happens with the trend is this. Right now we're at 1.65. What the trend is still saying is that there's still a trend at 1, folks, means the market is balanced, that the buying and selling is balanced. A 1.65 is saying that there's more selling than buying, but that's not a big trend. You need a trend come in here about 2.75, 3, somewhere in that aspect. In fact, I'll show you when you go back and you look at the August 21st, you did a 2.89. The 25th, you did a 3. That's the type of trend that you need. And then on top of that, though, you need a rejection of lower price. That's what you need. Now, what is really cool here, okay, is this. You can see the Dow is down 131. The Nasdaq is off 29. The S&Ps are down 13. Percentage-wise, what you have is that you get the Dow down 0.7%, the S&P down 5, the Nasdaq down 0.6. That being said, it's the Qs, the NDX 100. That is the strongest indice out here. You know, you're talking about they're only down 44 cents. That is a heads up. So we'll see in the next, you get 20 minutes, I believe. Yeah, we get 16 minutes coming into this market close. And if the NDX 100 rejects lower price, and it looks to me like that's the only one that even have a shot at it, because all day long, the NDX 100, okay, let's put this up, NQH. The NDX 100, each and every time the market was pulling back in a huge way, by the way, okay? If you're trading out here today, these swings were just huge. The NDX 100, we went from 43.70 to 42.73, and you know that's a 100-point move, folks. Okay, 100-point move is $2,000 a contract. So we're right under the lows right now of this morning, which is 42.77. The NDX 100, as we come into this close, would have to, in order for rejection of price here, this thing would have to move like an extraordinary way. But guess what? It can move in an extraordinary way. There's no doubt about that. We had a question about Harmony Gold. You know, Harmony, we do own Harmony Gold in the Gold Report. This has been a rocket ship in an extraordinary way. We are trading at 127 right now, but the question is, where's the buy and the retracement for Harmony? What you could do, so Harmony in 5 days, folks, went from 92 cents up to 146, had volume behind the move. It's back down. The way you're going to need some patience on Harmony, because let me pull this up in South Africa for a second. That's interesting. See, in South Africa, what it did, it actually rejected lower price this morning. South Africa, Rand dollars, it went up to 2,400 Rand dollars. It pulled back to 2,063 Rand dollars today, but then closed out at 2241. It almost looks like an ABC up. It looks like it's going to make another leg up. Buying, I would say, in at this particular point is a little too, it is definitely too risky, because when you have a move such as we did on Harmony, in 1 month you move from 53 cents up to $1.44. So you'd have to wait. I'd wait for a retracement and like $1.06. We'll see whether it gets to $1.06, but that's how you got to trade that baby. We go take a look at, now let's go over to the S&P futures. We take a look at the S&Ps. They're down $16 right now. They're selling these babies into the close too, and you get some juice on this move. So this S&P right now, we're down 16.5. You're at 1916. Let me put this up on a weekly for a second. Man, it's a big bar. On a weekly, anything under 1935, the next game here is 1853. And you got to remember that the 1824 is the high volume swing low from August. That's going to be hit. The larger issues, folks, okay, if you think, and this has been a bad week if you're long stock, there's no doubt about it. If you're in funds, whatever you're in, just to give you just a quick heads up, at the end of, I'm sure many of you probably listened to it. When we were coming into the end of the year, I did a full hour on where I thought the market was going to be. I believe that is still out there on the web too, if you want to see it. But I went through every indice and went through where I thought it's going to be, why it's going to be. The problem here goes like this, that we're consolidating for a full year. You're consolidating at highs with no volume. Your SPY is at 192. You get a high volume swing at 182. You get another one at 181. And you crack that, which I expect you're going to crack. It'll take some cause. You crack that, then you're talking 1,300 S&P. And that's a huge problem. There's no doubt. And the key on that, of course, would be, how do you get down to those levels? Is it a fast and it's furious? What is it? Let's go to Alex in Massachusetts. Hey, Alex, what's going on?
How are you doing?
I'm doing great, man. Yourself?
I'm doing good, thank you.
Good, man. Happy New Year.
Happy New Year to you, too.
Yeah.
I have a question about bonds.
Yes.
I disagree with you on that bonds are going down.
I don't blame you. I just went bearish 2 days ago, but that's all right. You disagreed.
Okay.
You disagreed with me 2 weeks ago, but the market was going down too.
Okay, so
right? No, it was a great conversation, but you thought the market was going up 2 weeks ago.
I thought that it will bounce from 195. Yeah.
Okay.
But looks like to me that it will go to, I would say, 185. No stop.
185, you mean 185?
On the SPY, maybe 188.
Okay. That's 1860, yeah, thank you. Okay.
So I want to ask you, why do you think bonds going down? Because that's probably the only one sector which is bullish on my radar screen.
Okay, so this is what we had. Let's go, because my head is into these like in a big way, and it has been for a long period of time. So the bond market, two different things are going on here, where let me look at the 30-year. The 30-year is just about at the highs once again, I believe.
I agree.
And what has happened is this, is that when markets get to highs, most times you get 2 or 3 times to get out. Just stay there with us, okay? We'll go through this because this is really cool in the aspect of how I think markets kind of move. And this is all markets, by the way, folks. You stay right there, folks. Alex and I are coming right back. Dow Industrials are down $1.50. You get the S&Ps down 15. NASDAQ is down 40. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We're talking with Alex. We're talking about bonds and why I went bearish on bonds a couple days ago. So I want to bring up the continuous contract for you first, Alex, all right? Because the reason is that the first time that we had any volume off the highs was right after we made the high, which is August of 2015. And when you come off highs with volume, it's like, oh, you know, that was pretty intense. Now the market held. You know, the long bond went from 163. We came down heavy to 155. You know, it got to 153. And now the bullish part of that, and this is where there's no doubt that it's tricky, the bullish part was that it didn't even get to a swing point on the way down. We come back up, and, you know, it gets to 160. That was in October, okay? Then what happened is this, is that we went sideways again, and then we came down again. Volume came out of the bond market again on the 29th of October. We go to a lower lows. The bullish part would be, guess what? You didn't break a swing point again. We go all the way back topside again to 158, and you know what? The volume came out of it once again. Now, so I was looking at it and said, ooh, man, this is intense. So the bearish part of that was that the volume was coming off the highs. The bullish part was when you bring this back is that the retracement, folks, was so minimal that it's like, man, this is not even, that's all it is, the retracement, because it didn't break a swing point, okay? So that's kind of the bull and bear out of it. Now, when we were down, well, let's say 1,000 points in 3 days this week, and money didn't go into bonds, just even like today. You know, the 10-year's only up 12 ticks and the 30's up 19 ticks. There's something.
Take a look at volume.
I'm sorry?
Take a look at the volume.
No, the volume's great, man. No, I agree. I agree. Okay, so the volume's great. But this hasn't broken the downtrend that we've had since the highs in the market. If I bring this up, what you're going to see, the highs in the market were generated out here August 25th. And if you take a look at this, I can bring it back actually a little bit further, but we'll put it on the weekly. What you're going to see is that this, you know, this market right here, there's a downtrend that's in place, and it's pretty intense. You know, so we'll see. You know?
Yeah, I agree with you.
Yeah.
I agree with you, but...
Oh, listen, I think it's insane. I understand that. I'm not, you know, that was the last thing that I thought, because particularly I'm a bear, so I'm thinking the market, you know, market wants to get down anyway. I said, this is really whacked out. The market wants to get down. But my take, the bonds right now still should be, the 30-year should be up 1.5 points in a heartbeat. It's like, it's up 20 ticks. No one...
Yeah, according to my screen, which I usually use 65 weekly, there is only one sector which can be bought soon. That's the gold, but not yet.
Well, you know, I've heard this, you know, a million times, okay, meaning in gold. What cracks me up on gold is that if you want to look at stocks, folks, people say, okay, the gold hasn't moved, stocks haven't moved. Guess what? An Eagle just went from 21 to 29. Gold Corp, some of these stocks are up 20 and 30%. It's like, okay, well, if you don't like 20 and 30%, that's okay, but, you know.
Yeah, I'm not a trader intraday, so it's more long-term. But what you would suggest, to have a physical gold or to go for index?
It depends what you're looking for. I mean, you know, physical gold.
2 years.
Yeah, I'd buy physical gold for sure. Yeah. Yeah, and you're not gonna get like 1,900 out of it. I think you get 1,550 out of it, and right now you're at 1,003. You know, that's not bad.
Thank you.
Okay, man. Have a great one. Have a safe one.
You too. Thank you.
Thanks, man. You stay right there, folks. We'll be coming right back. Dow Industrials are down 185. Nasdaq's up 48. S&Ps are down 21. We're gonna right back, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. Expect the best. Believe something good is going to happen, and it usually does. Market-wise, let's take a look at it out here. We had the Dow finish down 167, Nasdaq off 45, S&P's down 20, gold contract down $4.30, trading at $1,103 an ounce. Now, what you have with gold is this. Gold goes topside, has wide price spread, has volume, all of the above, Tuesday, Wednesday, Thursday, pulls back today with lighter volume. Gold wants to run up to the 11.92 area. Silver down 40 cents today, $13.94. Silver has a problem. Silver did go higher yesterday with volume, gives it up today with volume. Bottom line, silver's going to get over $14 once again. Platinum up $2, $8.79 an ounce. Copper $2.01 a pound. Light sweet crude, problem child out here, no doubt, down 37 cents, $32.90 at broker B point. Wednesday, broker with volume, wide price spread, price projection $28.25. And it's pretty amazing, folks. But I suspect what you're going to see when you get a break of 30, just psychologically, a break of 30 in the oil market is just absolutely wild. No doubt. Right, Dave?
It is. And I remember, like on air once, saying that one of the cardinal rules of commodities is they'll go to some kind of astronomical price.
Yep.
And then they'll come right back to where they started from. In this case, even lower. But I remember, I think at $150, I said to somebody, I said, well, this thing really kind of took off at $48. So eventually, it's probably going to come back down to $48. I think this was when it was like $150. And
it's crazy.
People were telling me I'm nuts. I didn't know when it was going to come back, but normally they go to super prices and everybody starts pumping. Right, in the case of crude, and then at the point that everybody goes out of business, and they can start making money again.
And in this case, the oil market, it is phenomenal, folks. Okay, so you had the $35.40. That was the high volume swing low from 09 that I felt was going to get tested. Bottom line, blows through it. Does an ABC structure on the way down, and even we know these ABCs when they break with volume, they're pretty good. Your probability is pretty good. You're going to get it. But psychologically, it's still wild because I'm saying to myself, okay, so 28.20, and we start hearing like $20 oil, folks, about 2.5 months ago. And I was saying $20 oil, man. That seems so whacked
The lowest I've heard so far is now 10.
10, oh my God. Well, I remember when I had the offices up in Alaska, I remember $10 oil. That was in the 80s. And that was a crash, too, by the way, okay? But I can imagine $20 oil now. That's what's so weird. You know what I mean?
You don't know if it's going to get there, but you could think that there's enough reasons to get there.
Before it was unimaginable.
Right.
Now it's like, okay, we know markets well enough that if the 1-to-1 ABC structure is 28.20, well, guess what? That's just a 1-to-1 structure, folks, okay? And, it can do a lot more than that.
So when crude was 80, would you say that we're maybe in the stock market at the same mentality, that there's no thought that it could go to 30? Is that kind of like where we're at right now, where we're at whatever, 1920 on the S&P cash? Does no one really believe that we could go to some imaginably low number now? I think they do. I think they are all thinking that it's going to go a little lower and they're going to buy it and it's going to bounce.
Personally, I think the stock market could go a lot lower.
Yeah.
And I have an easier time understanding stocks than how oil can, go to from even 30 to 120 back to 30. It's like,
yeah.
I can understand the equities because of the fact that you can group them together. There's like, they're oversold. Overbought in a huge way, and it seems that it always happens, but it always happens in commodities too.
Yeah, but it's kind of the same idea. There's no way. It's no way that it's imaginable that in 2009 that we would have gone to the levels we have. Same way, there's no imagination that lets us think about how much the downside really could be. We think of it in a little bit, but we can't think of the big bunk.
So picture this number is a big number, folks, and bottom line, put your stops in, and you can make the argument that, hey, if I had stops in, in the past I get stopped out. Well, it's hard to make that argument for the last 6 years because the market went up. This has been the largest run, the second largest run in history for a bull market in the equity market, not as a bull market. I heard this stat, and not as a bull market. The largest run I've ever seen is that it's bonds. Bonds,
I do have to give you a compliment, and this compliment goes back to maybe 2000, and that is you said, and I was trading maybe 2 years at the time, full time, that until you go through a few cycles, you really don't understand it. That you have, everybody can tell you. But you're not going to see it until you've been through a few of these cycles. And the problem is that no one's been through one of these cycles since March of 2009. So we've got a lot of traders out there with experience of a market that only moves up.
Well, and so watch what you have. There's no doubt, and thank you. And what you have also here, now this is going to be a phenomenon that's going to be pretty weird, folks, okay? And this is what it is. You've read about all these hedge funds that are closing, okay? Well, you get a picture of something. The business that we're in, the money-running business, we're not in a money-running business, but the hedge funds are. It's a very young business, okay? You get some of the brightest young men and young women, running money. Well, they've never seen a bear market because, we've been in a bull market now for 7 years, okay? That's the first part. The second part is more intense, though, and this is what it is. As you see these funds closing down, which we have, they're closing down. When they close down, folks, they have to sell stock because that's how they close down. And the reason they close down, it's not that they're down 5 or 6%. The reason they close down, folks, is they can't make money anymore. And it doesn't mean they could make money, but it's easier for someone that has a pedigree, education, whether it's a Harvard, MIT, or something like that, to close the fund and then start again. Because what happens on a drawdown is that on a let's say they're running the $2 billion, and they get 20% of the profits. Well, if a lot of them have lost 16, 17%. Before they can get one more dime, they have to make that 16, 17% and then make it again. That's what's not really being reported. That's why there's so many funds closing down. It's not that they're getting out of the business. They're not. They're going to close that.
Reset.
They're going to reset. They're going to reset, man. And they will get the money again, too, by the way. Now, what happens in that is that's that domino effect. You know what I mean? And that's happening, too. So it's gonna be a wild one, and you're gonna get great bounces out of this. But we can tell you that, my take. What my take is. I mean, right before I've been bearish period. The distribution was going out for a year. This is markdown, and we've been in markdown. Really, August might have been the first beginning of markdown. Do you know what I mean? And we get one in between it. This is definitely, the volumes out here are tremendous. So. Bottom line, you're gonna get chances to get out of the market, though. That's the bottom line. And the hardest thing is that when you get these bounces, just like the August bounce, I'm sure plenty of you say it's gonna go up. It's gonna go up. Just stay right there, folks. Dave and I are coming back. We're gonna be talking technology.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dave White, Tom O'Brien. We do appreciate you growling and prowling with us out here. Man, Dave, of course, does a great show every trading day, 2 to 3 Eastern Standard Time. And don't forget, folks, no matter where you are in this great world of ours, if you're listening into your car, on your car right now, we broadcast 24 hours a day. We do live broadcasting every trading day on Monday, Wednesday, Friday, 8 o'clock in the morning to 5 in the afternoon. On Tuesday and Thursday, 7 o'clock in the morning to 6 in the afternoon. Now, you can get all of that programming right on your cell phone, TFNN.com. Go to TFNN.com, hit Tiger TV. You get Tiger TV coming right up, audio, video. Bottom line, you want just audio, go to TFNN.mobi. Dave does a great show every trading day, 2 to 3. Now, he's also going to be doing a webinar. So, talk to me about this webinar.
Okay, I've worked on a new tool to get and figure out what the short volume is each day.
Okay.
Now, if we're familiar, normally we talk on the radio or on our shows about what the short interest, either percentages or days to cover.
Right.
But unfortunately, that's very old data.
Yes.
Sometimes as much as 24. So I've done a little white paper. It's on the front page of TFNN. Just go to breaking news. Go to that, and you'll see the first half of my white paper.
Okay.
Now, that's for everybody. But if you were wondering about shorting, we talked about how many people probably haven't been through a real big bear market. You probably want to know what the short interest is on every stock, even in a bear market.
And the reason you want to know what the short interest is, folks, is this, is that if the short interest is too high, your probability is higher that at certain points they'll come out with some news, they'll drive the stock up, you know, because let's picture if you get a 20% short interest. That means 1 out of every 5 shares has to be bought back anyway. So that's one of the portions that we're talking about.
That's one of the portions. Well, anyway, I've been working on a new tool that allows me to see that short interest coming in every single day.
Yes.
Instead of maybe anywhere from 8, maybe
3
4
days, 5 days, whatever.
Yeah, it's long. It's actually, people could go short on the 15th of the month.
Yes.
And you wouldn't know about it until the 8th of the next month. So when these guys make these big operations, these big guys that start getting short, they tend to do it on the 29th and the 30th, and they tend to do it on the 14th and 15th and 16th. And that way it really doesn't show up in the short interest until much later on.
Okay.
In fact, we were talking during the break about just how big the shorts came in on the 29th on Amazon.
Right.
And we're going to talk about that during the seminar on the 20th. Anyway, if you go to the front, you'll read the beginning of the problem. Next week, I'm going to have the rest of the white paper that's going to talk about the solution to the problem, and then we're going to how you can really see where the short volume comes in. And then we're going to do on the 20th, we'll do the live webinar where I explained a little bit more. We show some live stuff, and we have question and answer.
And folks, so the way you get into the webinar is this. It's for subscribers, but you can test drive both newsletters right now, or either one of them, whatever you like, for free. You get into the webinar. The webinar is going to be on the 20th of January, 5:30 to 6:30 Eastern Standard Time. And, of course, just come over to the front page of our website at TFNN. You can test drive the newsletters, get the newsletters for free. If you like them, you keep them. If you like them, you keep them. You will get charged for them for the next month, not for this month. You don't like them? Guess what? It costs you nothing. You're still getting it to webinar. So great education for the right price. We're looking at a slide now in the chips.
That's right. We've got people like Amazon and Apple out there buying chip manufacturers and starting to make their own chips. We've talked about Apple really getting active down in Austin, Texas. They've got 3,500 engineers in hardware. Now, the question's always been, how can they differentiate themselves from companies like Samsung that literally make the screens, that make the batteries, that make a lot of the stuff that actually goes in the Apple phone? What they're doing is starting to make their own stuff so people can't either copy them or do themselves. But it
now,
is
chip making plants, though. With the slide we're looking at, it says Apple paid $8.2 million to buy a small chip making facility. Chip making plants are really expensive.
They are. Now, it depends on what you're making, though. You can make chips fairly inexpensive if you're using older technology.
Okay.
And this chip manufacturing fab is making older technology. So what they'll be doing is maybe making something that doesn't have to have the latest chip fab to make.
Yes.
But at the same time, someone else isn't going to just call up Samsung and say, I want 1.5 million of those same chips.
Right.
So they're going to make something that no one else can do.
It's a competitive atmosphere.
It's competitive. They don't want people being able to buy the exact same thing. Now, maybe this chip is for the fingerprint sensor. Maybe it's for an eye retinal sensor.
Okay.
Right? There's going to be something in this that they build that only they have, and the only reason for them to actually do this is make sure no one else gets it.
Why would Amazon be doing it?
Amazon, probably the same thing. They really want to differentiate themselves from Google right now. And if they're making their Kindles and their other Kindle products,
I see.
They're buying stuff off the shelf. Anybody can duplicate what they do. So the whole idea is to try to make sure to segment your market, make sure that people can't copy as much stuff as you do, and make it very hard for them to get it. Put in a barrier to entry.
Yeah, because the ramp up is very easy. No, I'm with you. Yeah. So, and what we're talking about here, folks, when I say easy, it's easy if you have money. But there's plenty of people with money, plenty of companies with money. Right. Yeah, so this is the big news this week. The Consumer Electronics Show was this week.
And it was buried in all the China news.
Yeah.
And no one, I think it got like 5 minutes.
Oh, that's terrible. The
market going down, no one wanted to listen to this, right?
And normally all these people get free advertising.
Right. Normally it's a great deal because, of course, it's easy content for CNBC or Bloomberg.
Sure.
They just go up and stick microphones in people's, and they got 4 hours covered, right?
Exactly.
If you got to fill 8 hours a day, you're looking for anybody that can come on and do something. So we didn't have any of that, but it was very interesting to see because it was actually one of the shows that wasn't as boring as all get out, like they normally have been for many years.
No, I'm with you there. So why wasn't it boring this year? Because, let's say if we looked at it, I remember the last, really 4 or 5 years ago, it was no big deal, right?
No. There were a bunch of TVs, and that was it.
Yeah.
Right? So what they did show this week, though, was a lot of electric vehicles and some new ones that we hadn't seen before. They were showing some new 4K DVD players, so those big high-resolution TVs are finally going to get a DVD player, and we'll talk about that. But it's also just a great deal of stuff. But, I think we're going to probably spend maybe 5 or 10 minutes on electric vehicles because there was a lot of news coming out this week. First of all, the U.S. Transportation Secretary is actually going to give self-driving cars some rules. They may not be instantaneous, but they will be rules.
Yeah.
Now, I've written about this in my newsletter. I said I was going to talk about it in my show.
Yeah.
But self-driving cars sounds like a great idea. They test them in Arizona. They test them in California, where the weather's almost always perfect. The sun's shiny. They test them in the day. And I've said this, as an engineer, the first thing I start thinking about is, okay, these things are using lasers to drive themselves down the street.
Sure.
What happens when we have a horrible driving rain like we have here in Tampa? Does it just pull off to the side and that's it?
Don't you think, though, when I look at that, I start thinking about this because we've mentioned this before on the show. And I start thinking, I remember when cruise control first came in, people were using it. Well, you use it like if you're on the highway. I mean, even if I was 16, I love driving down the highway and not having my hands on the wheels. Even with a motorcycle. You've done that.
Yeah, it's not that you can't.
Right.
It's can it. Is it really 2 years away, or is it 5 or 10? That's what we'll get to when we come back.
You stay right there, folks. Dave and I come right back.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dave White, Tom O'Brien. We appreciate you growling and prowling with us out here. We're talking about electric cars. So, I understand what you're saying that, how does an electric car drive? But I'm thinking that when they first start, it's just like, cruise control. Some people are still scared of cruise control. I'm just thinking that, hey, we can be driving down the road.
My only point is, when do these cars actually get certified by the government to drive?
Oh, yeah.
Without.
That's a different animal. I see what you're saying.
When
no
are
doubt.
they going to actually cash in?
Right.
Now, I found out this week that one of the other things that these roads out in California have that we didn't know about is they're putting wires down in the road.
That would make sense.
And I was asking you before, how are they going to drive in the rain, in the snow, everything else? It's a big question. Are you going to get somebody like the government now that won't fix the broken bridges we have to start putting wires in all the roads that we've got now? And the answer is, will these cars need a change in the technology of the road, not just in the technology of the car? And that has not been answered. We talked about the one during the break, which is my fear is that these things become nothing but bomb delivery devices, and the first one has a bomb put in it and sent to the IRS or anybody else they hate. Because if they'll drive autonomously, how do you actually make sure a human is in it?
Yeah, but they're going to do it.
Oh, they will.
There's plenty of money behind it.
There will.
It's happening,
But maybe, is it 2020? Is it 2025? A lot of people right now, like Elon Musk, are saying 2017. I don't think that there's any way that even the government has the regulations ready by 2017. I'm just saying they're getting way ahead of themselves. And then we go to Uber, which wants to get into driverless cars too.
Yeah. And Uber, well, and Uber. In fact, in the next break, folks, I'm going to give you a code to put into Uber. If you haven't tried Uber, I'm telling you, it's an amazing deal. Okay, you call them up, they're there. You know where the car's going. They don't expect you to tip. I tipped them anyway.
Did your driver play some kind of music that sounded like a cat in a blender?
No.
Okay.
No.
That's normally my experience in regular cabs, right? Is that every time you get into one in New York, it's some kind of stuff that sounds like a blender. Those guys, did they open the door for you?
No.
They didn't.
No.
Okay.
But okay, you bring up a point. I tell you, folks, this is the aspect. Okay, so picture, I had an Uber driver say the same thing to me that, this is much better than cabbies and all this. You got to remember something. I'm from South Boston.
Yeah.
Okay. Boston, New York, all these cities, folks, where you have cabs, okay, medallion cabs. I'm for those cabbies too, okay, and this is why, okay, that there's plenty of money that people have made there, okay, and the aspect is always like this guy was saying to me, there's murderers up there with cab licenses, and that's not even close, folks. If you have a medallion in New York, you have met one in Boston, I know both of them, you get a background check, okay, there's not bad people driving those cabs, okay?
Right.
You can make the argument that they're dirty and all this, okay?
Smelly?
My point is, you're talking about something in the city, okay? They're just making money, okay? So I'm not here to defend them, but I'm certainly not going to put them down because there's plenty of people that are making money and they're out there hustling.
I don't mind.
That being said, I would go drive Uber because Uber's going to put them all out of business.
It is.
Okay.
And of course, they're already doing it today. Yesterday, the Yellow Cab of San Francisco filed for bankruptcy, and their number one reason for going bankrupt was Uber.
Yeah, well,
they're cleaning them out there.
That's intense. Yeah.
So a lot of this driverless cars, new automotive disruption is happening now. And when we, where's my mouse here? There we go. When we get to it, we talked about the Chevy Volt. We showed you a picture of it that leaked in January, if you remember that.
Okay.
And they were showing that. In fact, they let the press drive them around in the parking lot there of the Consumer Electronics Show. So everybody got to start driving these around.
This is an electric car too, right?
This is their new Chevy Volt, not the one that had about a 90-mile range if you were lucky.
Okay.
It's going to be under $30,000 with federal subsidies.
Yeah.
It's going to probably have somewhere around 200-mile range, maybe a little bit more,
that's a long
and under $30,000. I'm thinking that one of the problems I had is that it's hard to justify buying an electric car if the battery's going to die in 4 or 5 years. But if you're doing fleet service and you're driving that car every single day, it makes a lot more sense for this to charging up for electricity overnight while the cars are sitting there.
Sure.
If you're like an auto parts store and you're driving parts around all day, this would be a perfect kind of product.
Oh man, check this out. Hey, I got a new business for us. Hey, this would be a trip, folks. Listen to this. Man, this is a trip. Okay, so picture this. You'd need hydropower near cities, but okay, so picture big mines in the mining business, right?
Yeah.
Some of the most profitable mines, folks. Okay. And there's a few in Canada that are like this. They're right next to hydropower, okay? And hydropower, of course, is almost free.
Free, right.
Okay? Could you imagine, you're near a city, right? Like I think, you folks up in New Hampshire, they got a couple great rivers that come down, right? Could you imagine, wouldn't that be a trip?
If you were in the Tennessee Valley with, whatever, 20 dams,
Isn't that wild? Think about that. That would be absolutely wild that, you're not paying anything to hydropower.
Even if you did it with coal or you did it with natural gas.
Coal? What are you going to kill us all?
Even if you did it with... I'm for the miners in West Virginia. I'm one with the miners.
Did you? Oh, okay. That Lewis's book, man.
Yeah.
I went to bed, folks, with it was John Lewis, I think. He was But all those poor guys got black lung and died, man.
Yeah, now they're just unemployed. Anyway, if you use natural gas or something else, even solar cells, whatever, you're really talking about to charge these every night from totally empty to totally full, somewhere around 50 or 75 cents. So you could easily, even at $2 a gallon gasoline,
oh my God,
it's cheap.
Wow.
they don't drive that fast. The insurance is going to be cheap on these things. And
As long as you don't get a Tesla. Tesla's rocket ships.
Well, we were going to get to that, but Monday I was telling you, I think when we were just doing the break, about Tesla getting hit by $20.
Right.
Well, they've changed the rules, and the biggest state that they sell in is California, and California is not going to pay subsidies now for those expensive cars anymore, and that's why it took about $22 off of it on Monday. Yeah, it was Monday, wasn't it? This week they're starting to confuse me when you sit there and go, it was Friday was New Year's, so Monday. Right?
Yeah, gap down.
So, yeah, you gap down huge. But that was basically they introduced that day the discussion where they're not going to go over like $30,000 or $40,000 for subsidies.
Okay.
So all those expensive $80,000, $100,000 Teslas are going to be minus 10 grand subsidy.
Okay.
And that's what hit Tesla in it. Now, also in that business, VW showed their new microbus that's an electric vehicle.
Yeah.
And it looks like it. They showed one with all the windows blacked out, and all the windows were just TV screens. So you were looking through cameras instead of looking out through your windshield. And it was going to be, it's not a self-driving car, it's just a car that you look through and every window is literally a TV set. I didn't, under that, they are going to make one with windows. But that concept was one that literally is blacked out on all windows, and you're just looking at TVs. And
Tesla's coming out with their SUV, right?
Yeah.
That's going to be,
anyway, we'll talk about the VW one because it's very interesting.
And especially with VW, they should be cheap, man. They need some money right now.
They need money.
Dave and I are coming right back, folks. Dow finished down 167, Nasdaq off 45, S&P's down 10. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dave White, Tom O'Brien. We do appreciate you growling and prowling with us out here. And don't forget, folks, Dave does a great show every trading day, 2 to 3. He has a webinar that's coming up. It's going to be an outstanding webinar. You can come over right to the front page of TFNN. You can sign up for it right now. Now, when you sign up, folks, you can test drive Dave's newsletter, come to the webinar. It's all going to be about looking at a short volume in a new way that Dave put together. One part of the white paper is already under breaking news that everyone can read. The second part of it is going to be out for subscribers and for anyone who signs up for the event. Right now, we're talking about electric cars. And you know what's amazing is that the car business has always been a huge business. Now it seems like it's even going to get bigger because we get electric cars, we get driverless cars.
Well, I think it's going to change. One of the things people haven't really thought about is when we go to electric cars, there's a lot of things like transmissions that go away, automatic transmissions. You're just hooked up to the electric part of it.
Wow.
Engines,
That's
right?
wild.
These engines are just wires wrapped around magnets.
Really?
It may cost you $300 or $400 to have an electric motor overhauled, but it costs you $5,000 to get a gas motor overhauled, right?
Wow, that's wild, man.
Mechanics may be working. I think mechanics in the future are going to be more electricians than they are really truly mechanics.
That would make sense.
But that also means that a lot of these cars that literally have engines that wear out, you go get a rebuilt electric motor, put it back in. I'm thinking that one of the things that's going to be a byproduct is going to be cars that are around a lot longer than even the cars are out now.
That's pretty cool,
I mean, you could get maybe 250, 300,000 miles on cars today that are still driving around, at least down here in Tampa, right?
Yes, right.
They may be like, you see those diesels over in Europe where they show little medallions for $500,000, $1 million. And I think with electric cars, the things that can go wrong with them are very finite and not expensive to fix when they break.
How do they? Okay, so an electric engine, how do they make it go fast? What is that? What is the difference between like an electric engine and a gasoline engine?
It's a big resistor.
Okay.
And you have lots of resistance and no resistance, and you just move that back and forth.
Really?
And so if you let a lot of current flow, you're going fast. If you don't let much current flow, that's it. It's
that's
basically
pretty neat.
It's just they call it a very...
Do they have pistons? No?
No.
I get it. No, it's a flow of electricity.
Just imagine you wrapped wire.
No, I got it. I got what you're saying. That's really cool, man. I never realized that.
It's just that. And you're just varying the amount of electricity.
I was thinking that the electric is like the gas, but it's not. It's totally different.
Just how much power from the battery goes to the engine. That's it.
That's why those Teslas go so fast.
Right.
Oh my God, I get it.
Because literally you're not waiting for the engine to spool up.
Right.
To really start getting the power. You get as much torque at the beginning as you get at the end, right? It's not a car, like a truck engine.
Right.
Those things are made like any of these big trucks you see on the road.
Yes.
They're gasoline.
Right.
They're made to run somewhere between 3,200 and 3,500 RPMs all day long, and that's where their max torque is, right? You get an automobile, it's got a much better range because you want power at the bottom, power at the top.
Right.
But if you're pulling a lot of power, you want that torque. And that's all the electric engines are. They're torqued from the bottom all the way to the top. They're not like gasoline engines that are very hard to tune
That's cool to
the
know.
way and make them feel drivable, right?
Yeah, right.
So they're very simple. That's why these car companies are really looking at how much stuff that they can throw in these cars, like TVs and everything else, because the money that they're going to be making is going to be fairly finite. It makes the cars... The battery is the only part that's bad in electric cars right now because they wear out.
Okay.
I think that there is technology that will make them, the battery packs will be called something else, and they'll last 10 or 20 years. And that, again, makes it infinitely interesting.
Pretty amazing, man.
But you've got that. And then, of course, Apple is getting into the car business. 2 days ago, they secured the Apple.car, Apple.cars, Apple.com domains. So now they've been buying up all the car domains for the Internet with Apple in their names.
It's not going to save them.
They could go down for like a couple of years and then maybe come out with another new hot product.
Right.
But cars are, like we talked about, and again, one of the interesting things, self-driving cars, is it 2017? Then you might be able to see the light in the tunnel. If it's 2020, does Tesla, does Apple, do all these people that are betting on all this stuff, does that come soon enough, right? And that's why I'm really interested in...
And Google, it's amazing. Google was the first one with driverless cars, right?
They certainly have driverless cars also. And it's going to be interesting.
They just want us to buy stuff on the internet right now.
Right. Facebook finally shipped. They bought this Oculus Rift company. Everybody's seen these kind of goofy goggles on everybody where they're just moving their heads everywhere and playing video games. They're always showing it on CNBC. They bought it, 2 years ago?
Okay.
They finally took pre-orders and started ship. They were going to ship on Wednesday.
And what does it do?
This is one of those set of goggles. Just imagine a swim goggles, right?
Yeah.
And everything in front of you is a LCD screen. And as you move your head, everything moves like the real world. So if you're in a game and you look like that, you're looking at somebody to your right. You're not moving a joystick. Where you move your head is where the screen looks.
So this is for gamers.
To begin with.
Yeah.
But there's a lot of other reasons to do and use this kind of technology. They were originally going to come out at $300. Everybody was wondering, not so much, $600. And they goofed up because when you think about it, Facebook's never taken money from the public.
Yeah.
Right? They always take money, like Google does, from the advertisers, right?
Right.
So they put this thing on their web. Their website crashed. No one could get anything through. Dell, on the other hand, was making packages with a new computer and these, and they were taking orders all day long. So mysteriously enough, if you ordered yours from Dell, you're probably going to get it a week earlier than if you ordered it from Facebook themselves direct.
So would Dell have
it has a deal,
promotion?
It has a deal to make this special computer that's very high speed.
Okay.
Which you will need to use
that's
these.
So smart, right?
To package it with this. But they also came out with the games, and there's going to be computer games that we're familiar with.
Yeah.
That I play now in 2D,
right,
that are in this in 3D.
Okay.
And the game prices, they did publish, there's going to be about 20 games this year, and they are going to be pretty much priced just like the games that I buy for my 2D computer.
So that's going to be a big deal.
About $60.
It's going to be a big deal, huh?
Well, how much money has been made? Well, we talked about Electronic Arts and Activision.
Right.
When these guys are, the first month's sales are $1.5 billion. They're what Star Wars was, the one movie, right? But they're every couple of years. They put in $300 million into the game.
Yep.
They get $1.5 billion back. That's the kind of money that you really like to see, right?
And this is definitely new technology.
And this is what Facebook, at least, is starting to get the second leg of a stool. It may, they've got one business out there. If that business would fail, they would fall. It's kind of like Apple now. They've got one real business.
What do you think the next business would be for a device like this outside of gaming?
Industrial uses, things that, well, say that you want to be using robot arms in a smelter that's 2,000 degrees.
Okay.
Now you can see things, and as you move your head and move your hands, you see everything interactively.
Yeah.
Trying to remotely control a robot on Mars is a lot tougher with the lag and everything else.
Yep.
And putting yourself in these, you can start using the programming to make it feel like you're in that robot sitting on Mars.
Wow.
And, of course, it's not going to work until 20 minutes later. But you get the instant feedback of what would happen now.
Right.
Same thing with the military.
Oh, yeah, right. Big
drones, that kind of stuff,
You stay right there, folks. Dave and I are coming right back. We ended out, finished down 167. NASDAQ off 45. S&P's down 21. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. Dave White, Tom O'Brien. The slide he has up right now is Salesforce acquisition. So tell us about this.
Salesforce made another acquisition this week, and like I said, a lot of this news got buried in China this week. But this company is called SteelBrick, and they continue to maybe be as well run as Amazon in the way of moving moving and acquiring all the right tools and the new companies.
Yes.
They're becoming a lot more like Oracle in the 80s and the 90s and even into the early 2000s with acquisitions and making the right acquisitions to make them grow in the right way. This one actually is, I thought, was very interesting. It lets sales reps figure out the right price to quote customers, and it allows, kind of like Amazon now knows what you've been looking at and everything else, right? It's using data acquisition, not to just give one price for all, but give the right price to one customer so that you get that particular customer's business based on things like area, weather, all the other factors that you need to go back in. It's using data analytics to go back and figure what's the right price to give this particular customer today, not the one price fits all across the country kind
Folks,
of thing.
this is going to be powerful, and this is why. You know, it was so cool because Dave's got a few slides, and I asked him to put this one up. And the main reason was this. If you've used Salesforce, it's a great tool, number one. It's a very simple tool. It's a great tool. And as Dave said, if you want to, using it correctly, you put the information in there so you go back and you already know when you talk to them, who you talk to, and vice versa. Now, that being said, this is amazing. I'm coming up on the elevator 2 days ago, right? Now, this guy never should have been doing this, okay? He's about 35 years old. And, you know, we're in a Class A building, you know, nice building. Guy's coming in, and he's talking on the phone, and he's explaining to his sales rep how he wanted the sales rep to sell this person, right? And this is what he's saying. He's saying, now, listen, what I want you to do is this. He says, I want you to price up all these services. Okay? And he says, the reason you're going to price up all these services is we know that he's going to take the services. He says, but then we're going to tie him into this longer-term contract. When we tie him into the longer-term contract, we'll bring the services price down. Okay? And I was saying, man, this guy's crazy, number one, just talking like this, first off in the corridor, and he wasn't talking in the elevator, but, you know, you wait outside the elevator. So he's talking like that. I says, that's amazing. Now, that being said, it's like, wow, this company here, that's probably, I bet there's something inside of that pricing
the analytics of putting
the analytics
back
of putting together.
Get the deal.
You know, you go up on this, you go down on this, you get it, to have someone come to a yes. But that's pretty wild, man. But that's really smart of Salesforce, no doubt. Okay, so the CEO of T-Mobile got caught lying.
He did. We've gone back to this subject many times, but it seems like these guys just cannot stop throttling your data. And of course, he's had this big deal about
optimizing video streams, right?
Right. Well, basically all he's doing is throttling it. And worse than throttling it, he has basically, when these guys caught him doing it, instead of saying, oh, the honest mistake, everything else could happen, he's basically lambasted them and called them liars. Well, these guys are the Electronic Frontier Foundation. These are the kind of guys that know a lot of hackers.
Yeah.
And you probably shouldn't call them liars unless you got it dead nuts on.
Okay.
They've got him. Exactly. They've got data from all over the country. They know what's happening. They showed the data.
He has throttled it.
And he's lying.
And what he did, I believe, right, is that he sold a service and at a less expensive price, and he said that it wasn't going to be throttled. There was a data usage in it, though, right?
Right. But we still get back to this. It seems like every 3 months we get right back to the same thing, and that is that these guys, in an effort to make money, figure that the only way to do it is to actually ration their service out to other people.
Amazing. Unbelievable. Well, listen, man, great back with you. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great weekend, safe weekend. We look forward to speaking to you right back here at TFNN, 8 o'clock in the morning, Monday morning. Grab your phone, TFNN.com. Go get them, folks.